How entertainment and media companies can save $20,000 or more in taxes every year by hiring their kids, renting out their home to their businesses, deducting their house cleaning bill, and more. This video is for you if you own an entertainment or media company and you're sick and tired of paying 20% to 40% of your income on taxes. This is also for you if you have a feeling you're overpaying in taxes more than you need to. And guess what? Most companies do. We work with production, music, editing, animation, talent agency, and all entertainment and media related companies. Whether you own a small business or run a mid sized company, we're here to help you pay as little in taxes as legally possible. This video is not for you if you're not interested in tax savings right now. This information won't be relevant to you. This video is also not for you if you prefer to stick with your current CPA and their standard tax practices and don't want to explore different credits and deductions. My name is Scott White and I'm the Business Development Manager at Custom Accounting CPA. We help entertainment and media companies save thousands of dollars in taxes every year. I'm about to share with you 8 powerful and surprising strategies that can save you $20,000 or more on your taxes. And most entertainment companies aren't even taking advantage of any of them. And if they are, they're doing it wrong. This year, we've already reduced taxes for a media company by $81,000 just by implementing the strategies I'm about to talk about now. For a big film production company, we've reduced their taxes by $237,000 this year alone. So let's jump right into it. Strategy number one is hire your kids. Yes, it's true. You can actually hire your children to work for you and get a tax deduction. When your children work for you, you can move some of your income from your higher tax bracket to the lower one. The money you pay them as wages becomes a tax deductible expense for your business. You can hire your child at any age. Just remember that they should be doing age appropriate work for your business that is relevant, and make sure to pay them a fair amount. They can do voiceover work for cartoons or video games, give feedback on kid centric content, model, or act. We currently work with an owner of a film production company and we advised him to hire his 2 children. Now he's on track to save $15,000 in taxes by the end of the year. Keep good records like timesheets and job descriptions, and you'll stay on the right side of tax rules. Strategy number two is rent out your house to your business. Have you heard of the Augusta rule? It's in the tax code, section 28AG to be precise, and can be a game changer when it comes to saving money on taxes. So here's the deal. If you own or rent a property that you use as your personal residence, you can rent it out to your business for business related events. The key is to rent it out for 14 days or fewer for events like film screenings, photoshops, photo shoots, networking events, acting workshops, screenwriting seminars, casting calls, film or album launch parties, you name it, as long as it relates to your business. This year, I had 2 entertainment clients do this. They both rented out their homes to their companies for 12 events each at $1,200 an event. That's now looking at savings of $5,000 and almost $8,000 on their taxes this year. Now, to qualify for the Augusta rule, you need to meet these requirements. Number one is the property that you rent out for these events must be your actual personal residence. It can't be a random property that you own. Number two, the rental period must be no more than 14 days throughout the year. Number three, the rent you charge your business must be reasonable and in line with fair market value. Remember, it's always a good idea to consult with a tax advisor, especially when it comes to this strategy. They'll help you navigate the ins and outs of the Augusta rule and ensure you're maximizing your tax savings. Strategy number three, use the in-home office deduction, and don't forget 2 important things. Do you use a home office or studio? If so, you might already be taking advantage of the home office deduction. However, you probably are not taking full advantage of it. Make sure you also deduct the depreciation of your home and your house cleaning bill. We see that 90% of companies don't do this. One of our entertainment clients is going to save $8,000 on taxes this year, and another one's $6,500 because we know to deduct these often overlooked costs. Strategy number four is deduct your personal expenses. Think about your personal phone, laptop, and car. These are personal belongings that you pay for, but you use them for business related work as well. You check your work emails on your phone, you use your laptop to edit videos and trailers, and you need your car to travel to and from auditions, performances, and film locations. Here's how this works: keep detailed records and receipts of all these personal expenses, clearly showing that they're business related as well. Then submit expense reports to your business following the accountable plan guidelines. Once approved, your business can reimburse you for these documented expenses. The best part is these reimbursements are tax deductible expenses for your business and tax free for you. They're not subject to income tax, payroll tax, or self employment tax. It's like getting free tax free cash. See if you Strategy number 5 is see if you qualify for the R&D tax credit. We know that you and your team are very creative. You might have found new techniques to improve special effects or perhaps develop a new software for editing and animation. As a result, your entertainment company could potentially qualify for the R&D tax credits. The money that you spent during the research period can also be eligible for a tax deduction. For example, you might have to have paid for special cameras, computer programs, or classes to help you develop your new film production and editing techniques. This credit has specific criteria for eligibility and documentation, and it's highly recommended that you work with a tax professional who is familiar with the regulations and can help you identify eligible R&D activities and expenses. Strategy number 6, take full advantage of the QBI deduction. What is the QBI deduction? This deduction lets you deduct up to 20% of your qualified business income, which is like making the first 20% of your business income tax free. You can take full advantage of this deduction by being careful with your owner's draws, which is when a business owner takes money out of their business for personal use. Depending on your business entity, for example, if your company is a single member LLC or S Corp, large owner's draws can affect your QBI, but we'll make sure you get the full deduction. Strategy number 7, use the health insurance deduction. You can deduct employee health insurance as a business expense. This includes premiums for medical, dental, and vision insurance. However, health insurance is very often not properly structured. Most companies don't add health insurance to the payroll, and so they cannot deduct health insurance from their taxes. Again, you are not eligible if you don't take this above the line deduction. Doing so ensures you can deduct it from your taxes. Strategy number 8 is choose the right business structure for your company. Your company can be structured as a professional corporation, a limited liability company, an S Corp, and more. Now, our team runs all the numbers. Is it the best for your company to be a single member LLC? Is it the best to be an S Corp? Is it the best to be a C Corp, etc.? This depends on several different factors, including where you're located. Some states have heavily taxed S Corps, like New York, for example. Some states don't, and it's more tax efficient to be an S Corp in those states. Now, some states don't tax LLCs heavily. We'll explore all of that for you. It all depends on your industry, salary, and more. The numbers will tell us what's better for your company and how to save the most on taxes. These are the common basic strategies that people miss out on a lot. Now, not only that, but experts in many other deductions and credits that I didn't have time to touch on here, including film tax credits and incentives offered by many states and localities. We are skilled at these more advanced deductions as well: finance charitable trust, oil and gas, solar credits, film investing, and leveraged back Roth IRA, and more. Also, we know how to structure royalty and licensing agreements effectively to provide tax advantages, including setting up separate entities to hold intellectual property and licensing it to production companies. But this video is a good place to start. Consider yourself 10 steps ahead. Now, you can try to figure this out on your own or take this information to your CPA when it comes to time to file your taxes. However, your CPA may not be an expert in these tax credits and deductions like we are, and you may miss out on something that can save you thousands of dollars. Also, you may not be eligible for all of these deductions because they need to be structured properly and strategically planned every month throughout the year. There's another option. You can work with us, and we'll give you a month-to-month support you need. We'll coach you and give you the valuable insights throughout the year to save you $20,000 or more when it comes to file your taxes. This proactive approach, rather than simply preparing taxes and books at the end of the year, is what helps us get amazing results for our clients. Also, we guarantee that we'll save you more money in taxes than you pay us in fees. Otherwise, we won't take you on as a client. Entertainment and media companies that we work with usually normally see a 200 to 300% return on their investment. In the case study I mentioned earlier, our media client has already seen a 632% return on investment working with us. We've reduced his taxes by $81,000 just this year alone. A film production client of ours has already seen a 1,800% return on investment working with us. I mentioned him earlier as well. If you remember, we've reduced his taxes by $237,000 this year already. If you'd like to learn more about us and schedule a call, click on the link below of this video. We're happy to see how much we can save you on taxes this year.